Hi. Now that we have looked into the aspect of underwriting in the last video, let us look into the aspect of issue management in this video, which is a very critical activity which is undertaken in the investment banking space. So what is meant by issue management? Issue management means the management of securities of the corporate sector offered to the public on a regular basis and existing shareholders on a rights basis, which is, this term issue management is also known as public issue management. So what it essentially means that a set of securities, or I may say different financial instruments from time to time, which are being placed across for the general public to subscribe as an investor to those financial instruments, and managing this entire gamut of activities around that. Or say in case of existing shareholders, when a company floats the rights issue, when an investment bank undertake all these activities, this nature of activities comes under the broader head of issue management or public issue management, right? So let us see the types of issues of securities that issue management activity entails. So the first is IPO, which stands for initial public offering. The second is FPO, which is follow-on public offering. The third is rights issue. Then there is private placement, and the last is handling of transactions related to ADR and GTR. So let us understand one by one as to what each term suggests. So IPO, as it's a very common term in the domain of finance. So it is the very first sale of stock issued by a company to the public. So when this very first sale of stock or shares which is floated by a company to the public, it is called an IPO, right? Now there are large IPOs which are underwritten by a syndicate of investment banks, or there may be led by one or more investment banks, which is all, as we have come across this term earlier also, as there may be a lead underwriter. And upon selling the shares, the underwriter keep a commission based on the value of shares sold, called the gross spread, and the underwriter certifies the issue by putting its reputation behind the issue. So when this IPO is floated in the market, we need to understand that there is an activity of underwriting that takes place, so which we have discussed in the last video. Now this activity is undertaken by either one investment bank, or it may be a pool of investment bankers, and then if there is a pool, then there is one investment bank which leads, and that investment bank is called the lead underwriter. When the shares are underwritten and is floated in the market, the underwriters makes money in the form of a commission based on the value of shares that is sold, and this term which is used in this context is called the gross spread. The underwriter certifies the issue by putting its reputation behind the issue. This is a very critical piece in this activity, because at the end of the day, if the underwriter is not being able to ensure that the entire IPO is being subscribed to, then there is a big face loss for the investment bank in the community. And the objective of investment bank is not to earn money through investments in any company. It is by the activity that they undertake in terms of underwriting activity or issue management activity or advisory activity that they intend to earn money. But if they are not being able to make the entire subscription process to happen, as we have discussed earlier, they have to take the extent to which they have not been able to get the subscription done. Now that is not something that in certain cases the underwriting institution or the investment bank would really be appreciative of, and this is not something which is really been taken well in the investment banking community. So there is always an aspect of a risk which is associated with whenever there is a IPO or a FPO offered in the market. Now let us understand how the IPO process work, right? So there are different steps which are undertaken in an IPO process. First is that there is an IPO idea which gets generated. So what it essentially means that whenever IPO is placed in the market, there is a theme that comes along with. There is a essence that is been placed across, because at the end of the day, people, when they are investing money in a company, they should ensure that they have a very bullish view about that organization, about the industry at large, and that if they are investing a certain percentage of money from their corpus, they need to be 100% assured of the fact that they are going to make a lot of money as return in the days going forward. So the basic fundamental idea basis which the IPO is floated in the market is a very critical piece in this entire IPO activity. Then the selection of the investment banker is a critical process for the company, as because the success of an IPO also is largely dependent on the investment banker who is being entrusted with the work, as it's quite a complicated process, and organizations who have been there, done that earlier, has more probability of success going forward. There are different stakeholders also who gets associated in this entire process, like the selection of underwriters, brokers, lawyers and other agencies. So every selection has to be very well decided upon, thought upon. Then preparation of red herring prospectus. So it's the fundamental blue book, I must say, which covers all the aspects around the business, the company, the industry, the technicalities around the business, the potentialities of the market, all the financial planning in the coming years. Everything is being pulled in one piece of information book, which is called the red herring prospectus. Now placing across, or the other term of it is filing of this red herring prospectus, is also very critical activity to different SEBI related, or I should say in case of the US market, it is SEC. So each market has their own regulatory body. So in India it is SEBI. So how to place across this set of information through SEBI to the public is a very critical piece of activity that's undertaken as a part of this IPO process. Then assessing investor interest. The one needs to understand that how the interest of the investor is well guarded, is well taken care of. For getting through an IPO process, a company has to take the approval from the related regulatory body. As I mentioned just few minutes back, that it's SEBI in India. So approval from those regulatory bodies is very critical. Then a final prospectus which needs to be prepared is also a very critical piece of activity in the IPO process. Then placing it across in the market to ensure that everyone, I mean to say the potential investors, to get to know about this sort of IPO that's been floated in the market. For that, the company needs to ensure that they hold press conferences and analyst conferences, and to address to all the queries that possibly come through those in those meetings and conferences. And then the final issue is been opened for subscription in the market. So this is more or less in a nutshell as far as the entire IPO process is concerned. So I think it would be better if we discuss the next part in the coming video, as because I would like to give you some time to assimilate the thought as to how an IPO process work, and what are the activities in relation to that, and what is the general activities, what are the aspects around issue management which is there, and what are the set of activities that comes under the broader theme of issue management. Once you are able to absorb all this set of things together, I think that would be an appropriate time to go to the next level of discussion. So I'll see you in the next video. Thanks a lot.